Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we are going to learn a concept that is on accounting policies. We are going to learn some of the examples and what is the importance, that is the significance of the same. Now, first, what is accounting policies? That is the first and the foremost thing. See, from the name itself, it is very clear that this policies is basically a set of rules that dictate a company's financial accounting. So in this tutorial, we will go at length about the accounting policies and its usefulness of these policies. See, without much ado, let's get started with the meaning of the policies. The first thing that we are going to understand is what are accounting policies. What are accounting policies? So basically, you can say that accounting policies are a set of rules or procedures that have been followed by which a company prepares its financial statement. You can say this is the first thing. Second, you may be asked, why should a company need an accounting policy? See, when a company prepares a complex statement or calculate an advanced method of accounting, it needs some guidelines, you can say, to follow with or for example, like accounting policies. To choose depreciation method, a company needs to follow a specific accounting policy. Accounting policies may vary company to company, but whatever a company does in regards to the accounting policy, it should be in accordance with the generally accepted principles, or you can say the GAAP, the generally accepted accounting principle, or you can say IFRS. So these policies are basically a structure, or you can say a framework for maintaining the quality of the products or services in a company. Accounting policies are also basically a set of, you can say, benchmark. You can see a benchmark, a set of benchmarks to represent a sound and accurate picture of accounting practices with a company. So what is the next thing that we are going to understand is what is the importance or the significance of the accounting policies. See, to understand the nitty-gritty of the accounting policies, the first that we need to understand the significance of the accounting policy. Accounting policies are basically significant for like some reasons are as follow. The first one is you can say for proper framework. Okay, so to articulate the financial affairs of the company, it needs to prepare the financial statement. And if the financial statement are just prepared without any guidelines, there would be no coherence with the same. They help find out the coherence between the financial statements. Accounting policies also offers a solid framework to follow so that the company may comply to the right structure and prepare its financial statements. The next is disclosure. Now, it's important that a company discloses what accounting policies they have been following, since accounting standards lets any item be represented in many ways. A proper disclosure of the accounting policy is very important. The third is basically providing, you can say, providing advantage to investor. See, if the company mention the accounting policy they use to produce the financial statement, it will also help the investors. By stating the accounting policy, the company basically ensures that they have maintained coherence while producing the financial statements. This coherence basically helps the investors to look at the financial statement and compare with the other companies. The fourth is like, the governments basically can keep a hold on the company's financial statement, since basically all the companies also needs to keep in mind that they can follow the accounting policies that is made as per the GAAP or you can say IFRS. Thus the government can have a direct hold on the company's financial statement and government can protect the interest of the investor. Let's understand an example on accounting policy. See, all the financial statements are prepared by following specific policies, and there are a couple of practical examples of the accounting policies which can help us to understand how the accounting policy has been followed. Let's say there is a company that follows a GAAP, okay, to recognize the revenues. Recognizing the revenue over here for the company is very important because it positively or negatively impacts the investor. For example, of accounting policy, if a company recognizes its revenue when it doesn't make any sale, it's not right approach. As per the revenue recognition, you can say a company cannot recognize its revenue until it has been earned. So that doesn't mean all the revenue would be in cash. It can be accrued also. So in the case of the credit sales, the earning is also real. Like for example of an accounting policy, let's say there is company T makes credit sales. There is company that is T that makes some credit sales and recognizes it as a revenue. Now, two things over here are important. First and the foremost thing is how the first company T can collect the cash. You can say how the company can collect the cash for the credit sales it has made. And the second, you can say over here in this particular scenario, when the revenue is going to be recognized. So if a company recognizes a revenue at the time of recording credit sales, and if the company does not receive any cash, then in that scenario, by that point, the company would be called as rich in revenue. It can be called as rich in revenue, but poor in cash. So accounting policies greatly affects how revenue is being recognized in a company. So as we have learned from this particular example, and there's a company called Ford. They recognizes its automobile segment revenue when all the risk and rewards basically of the ownership are transferred to the customer dealers, that is basically, or the distributors. Then and then only they recognize. Let's say the accounting policy example based on R&D, that is a research and development. This is an example based on research and development case. See, R&D expense, which are capitalized or which are called expensed. See, R&D expense can be capitalized also, it can be expensed. This is very significant consideration in the financial accounting, and a company needs to follow accounting policies that needs to be recognized, okay, the expense or the capitalization. But how it would be done? See, R&D expense certainly have some future benefits. Now, that's why you can say that R&D expense have been treated as the assets rather than the expenses. But when a company is expensing R&D, it doesn't know any specific future benefits. So that's why it cannot be capitalized in more cases. Sometimes when R&D expenses have a specific future benefit, it can be capitalized. But as per the US GAAP, you can say one should recognize the R&D expenses when they are incurred. This is really very important when we are talking about US GAAP. Now, see, we will see something over here that the total R&D expense was 11.6 billion, 10 billion and 8.1 billion in 2017, 16 and 15 respectively. So what we note, the Apple's R&D expenditure was this particular amounts that has been mentioned. This is from the notes of the, you can say from the notes of the Apple's company. Okay, so the next thing that we need to learn is whether it is aggressive, whether the accounting policy is conservative or aggressive. See, typically the firm operates within the periphery of two external or two extremes in regards to the accounting policies. Either a firm follows an aggressive approach or a conservative approach. You can say this, no matter what approach a company follow, it needs to reflect the same in the accounting policy, in the way the accounting policies are followed in preparing the financial statement. So, according to the International Accounting Standard, that is the IAS 8, accounting policies are basically convention, rules or procedures that have been followed, and even practices. That means that the whole framework of the accounting standards in presenting the financial statement of the company, that can be called as accounting policies. So accounting approach is to use the accounting policy should not be based on a single transaction or event or a condition. The accounting policy should be by keeping the big picture in mind and thinking about the preparation of the financial statement and also how this financial statement would be represented to the investor. Thank you, everyone.